less than up in here. So volume was dropping, and that means from the volume point of view that the selling was being absorbed. So based also on the fundamental reports, commitment reports, it shows that commercials, large traders like Wilmar, they have been reversing to long. They have been buying. And that's the reason the market has been supported here. So the one-eyed Joe pattern is very simple. You have I'll just draw a line here again. One up, 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 down, 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 down. And then it started doing this. And as you can see, a triangle is formed here. Now, One-Eyed Joe, for those who don't know, those who came to our main course, you know what that is. He was a very famous trader in Chicago back in the 1900s. He was a grain trader, wheat, corn, soybeans, things like that. And he only had one eye. He was blind in the other eye. But that eye was a very powerful eye. It was very powerful because he could see things on charts that other people might not see. A very powerful eye this guy had. And he would always be looking at his charts, and whenever he saw something like this, he would draw like this, one eye, something like that. I'm not a very good drawer, but that's it. He put that on his chart. And what he would do, the average trader, they will trade a breakout. They would want to see the price come through here on high volume, and then they will buy. That's what they do. Because the average trader wants certainty. He doesn't want to take a risk. He says, hey, I buy the breakout, I'm immediately making money, I'm ringing the cash register. But the problem is in markets, especially in professional markets like CPO, which is totally dominated by professionals, the professionals know that. And the professional's job is to take away the money from the sheep or the amateur traders. So all of the amateurs who buy the breakout here and put a stop maybe underneath here, the pro will slam it down and wash out all those stops first before it goes up. So immediately there's a lot of pain, a lot of panic, a lot of fear. But a One-Eyed Joe, he would take his position inside the consolidation when there's very little volatility, when no one's interested. He takes his position first because he's a risk taker. He's willing to take a risk based on the probability of the thing making him money or not. So that's it. So that is it. It's a classic story. By the way, he was a very, very wealthy trader, and he didn't make many trades. He made a few trades every year, and he would always take his position in the consolidation before the breakout. Now that's a style. I'm not recommending that style. If it fits you, you can do it. I just did it this morning. I put my money where my mouth is, because I believe it. So I took a position. Let's expand that out. This here is a One-Eyed Joe. So you can take a position anywhere you want in there and wait until it goes. Now, so then if you look at it, here it is. Well, I look at this. You see this? You notice just by your eye, the volume is definitely getting less and less because it shows that no one's interested. They're waiting for something to happen before they go in. So that's the One-Eyed Joe trade. You take your position in here, and you're willing to risk in here. I risk 50 points on the trade. If it doesn't work, I lose 50 points. No big deal. One lot, that's only 1,250 ringgits. I can take that. That's not a big deal. But if I did on a breakout, I have to risk maybe 100 points, which is a much bigger risk. Now, if I'm doing it as a trade, I start my operation in palm oil as a trade rather than an investment. This is my style. I'm not One-Eyed Joe. I'm using his technique to get in. But my method, if the thing hesitates up on this line and no demand is up in here, I'm out of there. I take my money. If it keeps going, that's a big windfall. And then I will add position as it moves ahead. So that's what I do. That's it. I did take a note here. If I had my thing. Here we are. So to do this trade, if you want to invest, you have to look at the fundamentals. Technicals is not good enough. You have to know what's going on. So one of the fundamentals I like to look at, Wong DBS has a very good service. You can get this for free if you're a client. They give their reports every week on the palm oil market, the supply and demand. Now you can get this from other brokers as well. OSK has it, CIMB has it. They all have about the same thing. So I read these reports. It gives me a feeling for the supply and demand of the market. And then once I get that, then I look for an entry. And I like the one-eyed Joe because not many people are doing it, especially the smaller traders. If I lose, I don't lose much, but if I win, I can win a lot. So that's all what it's all about. I wrote some fundamentals down on this. Yeah, here it is. These are some of the things, and you can get this on any of the websites. It's all doesn't cost you anything. I found out by reading my CPO, there's very high March crop production, much higher than expected for some reason. Then the April crop was also much higher than expected. That was perhaps the reason we had this big drop in here. And now, the news is that the May production is also going to be very high. That hasn't been announced yet. So if the May production is going to be so high, how come the market is not going down? So that tells me the bad news has been absorbed. So we look at the reaction to the news. I'm not smart enough to understand the news and everything supply and demand about palm oil, but I do know the reaction. And the reaction here is not bearish for whatever reason. Okay, the US dollar is definitely strengthening versus the ringgit. But is that bullish or bearish for palm oil? Martin? US dollar is weakening. My question is that bullish or bearish for palm oil?
It's bullish. The only problem is when Malaysian
because if you convert it to ringgit, then it's bearish.
Okay.
But in US dollar, it should go up because it's a commodity. As the US dollar goes down,
exactly.
Commodities go up. So do they counter?
Okay, it's a good point. I personally, I would say, just on one fact alone, it's bearish, because that means the soya oil is cheaper, competitively is cheaper than the palm oil. But there's a spread on it. I mean, but that's longer term. But based on this chart, it's not bearish, is it? It's neutral. So, I mean, we look at the chart, that has the information just on that. Now, another thing, what is happening, another dynamics that I've got here is the commercials have already taken their profits, and now they're buying forward for whatever reason in the forward contracts. So that's bullish. The other thing is the commercials are not shorting here. They're not shorting. The commercials are the big guys. So
how do you know that? Is there data?
yeah, there's data on that. There's definitely, if you glean over the research from the palm oil, you can get that out. That's available. Not an issue. But again, as I say, I used to trade commodities on a full-time basis. I used to be a commodities broker. And that was many years ago. And I found out what works for me is I use fundamentals and technicals. I don't just trade a chart. I look at both sides. And I try to get as much information as I can and filter out, you know, what is working and what's not working. So I have